Hey everybody, Chuck Barone here. It is Tuesday, April 16th, 2024. The beat goes on, guys. More crazy. And here I thought this was going to be a quiet week. So much for the best laid plans, right? Anyway, before I get rolling on today's show, let me take a half a second. Welcome everybody to the show. We got some new viewers watching the show. Thank you, Greg. And so welcome to those. And of course, welcome to all the regulars who are here every day. We appreciate you guys, every single one of you. All right, so let's talk about markets today. We knew we were going to get a little bit of data today. We did. We got housing and building permits, and we got some manufacturing data. All that completely overshadowed by St. Jerome. St. Jerome appearing at a forum for the Bank of Canada, talking about U.S.-Canada economic relations, blah, blah, blah. Well, Powell had quite a bit to say today. And the markets, of course, reacted accordingly. Markets were looking like they were going to rally today. Uh-oh, not so much. So Powell, anyway, before I get into all Powell stuff, let's go through these markets and what happened today. So the stock market was kind of mixed. The Dow squeezes out of small gain. So the Dow gained 63 points, sitting at 37,798. Now the Dow's tougher to take because if one that only has 30 stocks, if one of them has a big day, it could skew the whole average. So, but the Dow that's the one everybody follows. So manages to eke out a small gain today. The NASDAQ falls 19 points, 15,865 on the NASDAQ. The S&P falls 10 more points, 5,051 on the S&P. So the broader market's falling. The narrower Dow gets a small gain. I think that now it's amazing to me. The markets just want to live in their own fantasy world. I've been telling you guys, haven't I? We're not going to get as many rate cuts as everybody says. It's going to be very difficult for the Fed to cut rates during a big election, a very contentious, close election like this one. So I've been telling you guys, if we get one rate cut this year, that's going to be a win for us. We may not get that. So the markets, obviously, I'm certainly no genius here, right? I'm certainly no $1 million a year Wall Street analyst. And if I can figure this out, why are they looking at the whole world through rose-colored glasses, believing that they're going to get these cuts that are like everything's like magic, I guess. That's bullshit. So markets, black. Bond market, another crappy day for the bond market. Not dramatic like it has been, but still not a good day. The 10-year gains 3 basis points, sitting at 4.66. Now remember, when the yield goes up, that means the prices are going down, right? So the 10-year down small, up 3 basis points. The 2-year down a little bit further. The 2-year goes up 5 basis points, now sitting at 4.99. Guys, we're going to see both of these, I believe. Before it's all said and done, we're going to see both of these over 5%. It is what it is, man. Rates, I think that it's funny because we've had this low rate scenario for so freaking long now that nobody remembers what normal interest rates are like. Nobody remembers earning 5% on your savings account like people are getting now. That was like people in the old day would have freaked out about getting 0%. Now we just kind of go, well, that's what it is. Everything's skewed to borrow money, not save it. And now I think rates are going to be normal again. This rate we're at here historically is not by any means a horrible, high, catastrophic rate. It just is for a society that's been trained pretty much to expect rates to be near zero. And they never were for credit cards, even though it seemed like it. So the bond market continuing, it's just been in a bear market forever, no end in sight, guys. The dollar strengthens again today, up 15 basis points on the index, now at 106.33. Yet, sorry guys, the dollar's kind of giving us a little bit of an idea of where rates are going. If rates were going to come down, and the markets, the world believe that, the dollar is a world currency now. If the world believed rates in the U.S. were coming down, the dollar would be weakening. It's just that simple. So with the dollar strengthening like it is now, don't get me wrong. You had the ECB, you had Christine, what the hell's her name, out there talking about rate cuts for Europe. Already know Canada's already started cutting. You know, the Asian markets have kept rates low. Japan has kept their rates low. So most of our major trading partners are moving toward lowering rates. We're obviously not. So it's really fascinating difference here, but that might be part of the reason the dollar is strengthening. Then you got wars, so the flight to safety, even though what does that say about the rest of the world currency if the dollar is considered the safest these days? But anyway, the dollar continues to strengthen, just telling us that this whole rate cut thing is a big fiction. Precious metals today had kind of a weird mixed day. Gold gains. So gold up $5.60, $2,388.60 for an ounce of gold. Amazing number. Silver falls. A little bit of profit taking in silver today, down 68 cents, $28.23 for an ounce of silver. Still a good solid number. Precious metals are still going to keep going, guys. Believe it. This rally isn't over. It's just getting started. You know, even Bank of America is talking about $30 silver now. You know, there's going to be these hiccups. There's going to be these corrections. And remember, silver will always be a little more volatile than gold, in my opinion, because silver is the domain of smaller investors, right? Like I was saying, if you have $2,000 to invest, you can go buy, just using round numbers, guys. Don't be picking on me in the comments. If you had $2,000 to invest, you can go buy 1 ounce of gold, right? Or you can buy, 75 ounces of silver. So it feels like more significant in your hand, right? The silver does. So that's going to be poor. They call silver the poor man's gold, right? So the people with less affluence are buying silver. They're going to be selling it quicker too, because they use that money, especially if there's gains involved. They use that money to pay bills, to buy stuff. It's almost like a currency that actually can go up in value to them. So gold and silver having a mixed day today. Oil today comes down very small though, down 13 cents, $85.29 for a barrel of West Texas Intermediate. I still say that's $10 too high. If this war was not happening, then I believe we would have $10 less per barrel of oil. That's the premium, I guess, for this idea that the war could get bigger. Now, it's going to be interesting to see what happens with this war, because Iran came out today and said they consider the issue closed with Israel. Israel comes out and vows retaliation. So hopefully the voice of reason will win, and we'll have a situation without more bullets, missiles, drones, or anything flying. Everything can calm down a little bit. Israel and Iran have been at each other's throats for many, many, many years. So this little skirmish, if they let things settle down, prices will settle down too. Bitcoin today continues its slump, down $622, now sitting at 62,791. Still a strong number, but looking like it's losing a little bit of momentum. Bitcoin seems to be more and more trading with the market. It's going to be interesting to see as we get closer now to this halving, how that's going to actually affect Bitcoin. Fascinating stuff coming up, guys. All right, let's talk about Powell. So Powell, as I said, Bank of Canada event, talking about Canadian-American relations, blah, blah, blah. Well, instead of talking about that, Powell wanted to talk about American interest rates. So let's read a few quotes here. Powell says, "It will take longer than expected," quote, 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 "to feel confident enough to cut rates." He said, quote, "Given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us." Basically, Powell just tells you right there, guys, you ain't getting that interest rate cut. Not going to happen. Not going to watch. Hey, everybody hit the like button. Good job. Remind them. Anyway, So Powell, he went on, guys. I got to wear my peepers for this from reading my notes. He said, now this is the first time that Powell has actually acknowledged that the inflation fight is not going so great. And the inflation data in the first quarter not showing exactly what the progress that they want to get the inflation down to their 2% target. Inflation actually going the other way. It's going up, not down. Powell, I mean, what a difference a week makes, guys. Isn't it crazy? Wasn't it just last week Powell was reassuring the markets that they were going to get these rate cuts? I can't remember the exact phrasing he used, but I do remember him out there reassuring those markets. I laughed at the time. You remember, guys. It's bullshit, okay? Powell just trying to reassure the markets, not have them panic. But now Powell himself comes out and lets them have it, okay? He said, blah, blah, blah. Oh, yeah, PCE next week, right? So the PCE number we're going to get. Now, you know that's been a little more controlled than the CPI, PPI numbers have been. So Powell looking ahead to the PCE numbers, but I got a feeling he might be foreshadowing a little not so great news on the PCE. He was saying that that the Fed needs greater confidence, but indicates it's likely to take longer than expected to achieve that confidence to get the rate cut. There you have it, man. Right from the horse's mouth, kids. Plus, you had the vice chair of the Fed. You had Daly from San Francisco out. All of them talking back, walking back, talking down rate cuts. Rate cuts are not going to happen this year, as I was telling you. The data now even the market, the Fed futures, 0% chance of a June cut. Now they're looking to September for that first rate cut. That's going to be right after the conventions, right in the heat of the presidential election. I'm telling you guys, I just don't think the Fed's going to have the balls to cut rates with Donald Trump in this election. I just don't believe they're going to do it, but I could be wrong there. We'll have to wait and see that one out. So if the Fed does not cut rates, if I'm right, and the Fed does not cut rates during the election, we've got a chance at one rate cut in December. So we'll see where the data takes us. We're all, in this crazy freaking world we're living in, anything's possible, man. We've been talking about that. I've been talking about that with all of you guys in the comments, how it's just the craziest stuff ever. I mean, and each one of you guys has your different crazy that you guys are paying attention to. The stock market, the oil prices, watching gold blast off. But gold's another one telling you. Inflation is not where we need it to be to get rate cuts. And as I've said 1 million freaking times on the show, the Fed doesn't just typically cut rates because you want them to, okay? They cut rates because the data, the economy is showing signs of stress. There's more layoffs, there's earnings are down, or whatever the economic data they're getting that causes them to cut rates. Typically, they need that data to do it. They don't just do it because, well, we've been holding rates too high and the consumers could use a break. That's not what they do. So, it's going to be fascinating stuff over the next few months. There's no rate cut coming. And there'll be teasers and there'll be prayers and there'll be every freaking thing you can hear, head fakes about rate cuts coming. The market will be going up and down and in and out and all around. But I tell you right now, guys, don't count on rate cuts. So if you're following our strategy, you're getting yourself out of debt, not looking for ways to get into more debt. We've talked about what the method we use here, right? Saving 10% of your income, investing it conservatively, living on less than you make, trying to live a normal life. Like this used to be considered normal, not in any way outrageous. Now, I know with prices where they are, saving money's hard. I get it. But everybody can find a way to save a few bucks if you really want to. Anyway, I babble. Let's talk about a couple other things you guys need to hear. So we got data today. Housing starts completely off, just collapsing, falling 12.4%. Now check it out, guys. We know there's a shortage of housing. We know we need more houses being built, especially more affordable houses. Housing starts falling off. Building permits fall 5.7%. Overall housing down 15%. High rates, I've been telling you guys what they've been doing to real estate, especially for guys like me who are mortgage guys, killing them, but killing the business. Well, here's more evidence of it. So this tells me what I've been telling you guys. Housing prices are not coming down. There's a shortage of available properties. People with 3% mortgages have no incentive to sell at all. Prices are going to keep going up. Industrial production, we got that data today, actually giving a little bit of good news to the market. It comes up 0.5%. Yay, industrial production up. That's following up 1.2% in February. So maybe a little bit of manufacturing in this country starting to come back a little bit now. I think most of the stuff we manufacture lately is raw materials, but hey, at least we got some manufacturing working. The VIX, you guys see the VIX today? Oh, it did touch 20 today. I've been telling you guys to watch this VIX. This is the volatility index. Now it's up above 19. Expect more volatility. This not a good sign for the markets. Spike in gold and silver. I talked about that. And so this is telling us where rates and where inflation's going. You see gold and silver spiking like they have. That's not a sign that inflation is under control. That's not a sign of confidence in the dollar's power, spending power. How many signs do we need? And then lastly, the federal debt balloon. Have you seen this stuff, guys? They're creating deficits now $1 trillion every freaking 90 days. Really? Is that the plan, guys? $4 trillion a year deficits now? What are we seeing for our money here, man? Bonds overseas, rebuilding, foreign aid. What are working people getting? We're getting shit on because they raised the minimum wage and now they're trying to get rid of every one of those jobs. Screaming about $20 hamburgers. Working people get the bill. That's what I've been telling you guys. So that is never going to change ever either. Anyway, guys, I've been rambling on for too long. A lot of stuff to talk about. I'm going to be back tomorrow. Tomorrow I'm going to kind of do a little bit of a summary. Tomorrow's a quiet day for data. I'm going to talk about what we're seeing, all the evidence. We're going to put it together almost like a court case, where we're at in this economy, where we're at in this inflation, what's the likely going to happen going forward, and some stuff we can all do to protect ourselves and to maybe even profit. Anyway, guys, that's it for today. I love you and appreciate you all, man. We appreciate the support. The amount of views we've been getting goes up. Please hit the like button, guys. It helps our video get out in front of more people. We get a much better viewing numbers that way. We're trying to really take some steps now to grow the show, and we need your guys' help. I love you guys. I appreciate the support. I'll be back tomorrow to bring you the news you need, guys. Until then, have a great day.